Last Tuesday, we talked about the bearish case. We use the Russell 2000 compared to the S&P 500 using analog on 2019 and also the 2022. At that point, the Russell 2000 leading the way down. And once we have a breakdown in the Russell and the S&P 500 follow through, in this case, we do not have a breakdown happen. Instead, there's a spring. I also talk about in order for it to violate the bearish case, we need to see a commitment above the first level, above the high of the bearish bar. On Wednesday, the huge momentum bar to the upside, up 1.8%, commit above this high at about 59.60. That's the first violation of the downside momentum. And second, look at this downtrend line here. We have a breakout on Friday. That's encouraging because on Thursday, we did not see follow through to the downside. Instead, what we have here is a small candle. That's already a telltale sign. Let's check back a few weeks ago. Although there is a likelihood for it to form a lower high, this change of character bar in December breakdown and followed by a rally. And the rally is becoming smaller and smaller until this current rally. We see a weak rally and a lower high forming from 1 to 2. And on last Thursday, a lot of people might be thinking this could be like the previous two swing. First, it hit the downtrend line that have a downswing. Second, hit the downtrend line, have another downswing from a lower low. This is the third time. Take a look at the candle size. That's 1, that's 2, that's 3. Compare the candle size. First candle is very white candle, although there is a demand tail show up. Still, this is a white candle, bearish candle. Second candle, still relatively white candle. And third candle is a small candle. It's a test of the bullish momentum bar. It's very different from what we have previously. This candle acts like a reversal bar, totally engulf this bullish bar. And here, commit below the close of the bullish bar. And here, not even tested one half of this bullish bar. This is the first bullish telltale sign. Something's different from the past. And second, we have a breakout coming, a breakout of the downtrend line. That's encouraging. Let's compare the swing. We have first swing, second swing. This is the third swing. The third swing is by far the largest swing that we ever have. In terms of the supply level, I consider this as consistent high volume. Supply is still high. We'll need to see a test. This could be a sign of strong rally, and we need to see a backup action. Means I want to see it hold up the gain. With that, come all the way back to test the low. So if you come all the way back to test the low, then there's going to be a choppy session and form another prolonged trading range. However, if it could have some consolidation, forming a bull flag, we should see another attempt to go up and to test this axis line. This is by far the most important level that we need to monitor. Our 61.10, 61.13, that's the level that we need to pay attention to. That's important because that's the axis line. Previous resistance now become support. After this breakdown, we have rejection show up here. This is an important level. We need to take it one swing at a time because we couldn't jump to a conclusion that is going to the very bullish level and then break all the way out. It all depends on the reaction when it tests this 6100 level. If our supply level is still normal or even decreasing at this point, then there will be bullish. We need to see a reaction right at this level. Short-term wise, this is still an upswing. Since we already commit to first level is 59.60 here, above the high of this bearish bar. Second level is the downtrend line here. We need to see some consolidation or test bar, and before it have another attempt to push up to test 6100. Short term is still up. The medium term, that's still a trading range. We could have scenario, we have a consolidation test, another push, draw up some supply, people sell into strength, and have another reaction, downswing that will become a prolonged trading range to chop around before it resume back to have another cautious view from a accumulation structure. Need to see how it goes at this level, 6100. This is only bullish, and we have plenty of the setup. Most important thing is to focus on a setup. As long as there is a decent setup, grade A plus setup, then feel free to stick to it and try with a small position and manage your risk from there. Since that we have a slight decrease of the supply level, but I do want to rule out the chance for supply to re-emerge right at the top at about 6100.